Welcome to AARP, Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Welcome to AARP, Arizona Hispanic Connection, with another very important subject. The topic today is taxes, reporting to Uncle Sam. That is the topic today. We will be talking about how to report to Uncle Sam. We're going to be talking about, the new tax form. There are a lot of changes in taxes this year. I've asked around, and people seem to agree that it's not going to be as easy as people thought it was going to be. We have two guests that are experts to help us today with our topic. Again, taxes, reporting to Uncle Sam. To my left, I'm going to ask my first guest, if you don't mind, give us your name and who you represent and what you do. Go ahead.
Good afternoon, David. My name's Ismael Nevares. I'm the special agent in charge for the investigations division of IRS. As a special agent in charge of the field office, I'm responsible for all the investigative activity that IRS conducts in both the states of Arizona and New Mexico.
Perfect. And what do you usually see in the day-to-day?
On a day-to-day basis, our responsibility in the investigation division is primarily three things. One is to investigate individuals for tax evasion, just like the classic, Al Capone tax investigation, where somebody is cheating on their taxes on purpose.
Right.
And our job is to investigate them and refer them for prosecution. We also conduct money laundering investigations, so we work side by side with all the state and local law enforcement agencies to investigate individuals such as for drug trafficking, and we figure out how much money they made from drug trafficking, how they laundered that money.
Have you been around with the IRS for a long time? Because you seem to, seem to be pretty busy.
Yes, absolutely. This year I'll be celebrating 24 years with
Congratulations,
the agency.
24 years. Frank, how about that?
Yeah, I was only 5.
And, our other guest is Frank Varela, and Frank Varela has joined us at least for 5 shows, I want to say, in the past. Very appreciative of you, always being available.
It's always a pleasure to be here.
I know you believe in what we do, and thank you for making time. If you don't mind, give us your name, Frank, full name, and tell us kind of what you do. I believe you are quote-unquote retired.
No, yeah, right.
Just give us your name and kind of what you do, mainly on volunteering.
Okay, Frank Varela is my name, and I'm a volunteer for the VITA, which is a volunteer income tax assistance program that AARP produces, and it's what it does. It offers assistance to low-income people and it's all free. We file everything electronically. We take care of them, and there's no charge. And we consult them. We also do tax consulting for elders. So people that a lot of people say, well, I don't need to file, and in some cases, it's good if they do especially for identity theft. So it's good that if they go in there that don't do that. So, and I've been doing it for about 8 years, and I really enjoy it. I also do their computer work at night. I'm what's called the electronic returner originator, or the ERO. So I do all the computer work in the evenings, file all the taxes, and then see if there's any rejects. And so it's a fun job.
Good. Okay, let's kind of start with the questions and the conversation, because I know that President Trump, he pushed for a reform. I believe the name is the Tax Cuts and Jobs Act of 2017. The Tax Cuts and Jobs Act of 2017. Right. So let's cover some of those items, and then we'll kind of go back and forth with fraud, because there's just a lot of stuff happening. And one of the things that I always kind of hear comments about how tax preparers charge people sometimes too much. Sometimes they charge a percentage. Sometimes they have people literally sign the paper so that the refund goes to the preparer as opposed to the clients and kind of those things. So we're going to get to those kinds of things. And we will also recommend places where you can file your taxes for free. That sounds good.
Yeah, it does.
Yeah. So anyhow, we will talk about all those things. So please, call your friends, any people that you think would benefit from hearing this conversation. Also, if you do Facebook, please follow our page, AARP Arizona Hispanic Connection. All of our shows are Facebook Live, and then the shows become videos, and they stay in the page for years and years. So let's talk about first of all this act of 2017 did away with the individual mandate for ACA. Frank, right? What is that?
No, it actually, you still have, for 2018, you still have Affordable Care Act, still have a mandate.
So that applies starting in 2019.
Yes, and we have a lot of people who are confused about that.
Right.
They come in and they say, well, you have a penalty because you did not have ACA.
Right.
And they get upset. But it's not until 2019 that.
So anybody who did not have insurance in 2018, they will most likely pay a penalty.
Exactly, if they did not meet the required minimum insurance. But there's been a few changes, so there are a few exemptions that can be used.
Got it.
That we didn't have before.
Perfect. So they added some
exemptions, a few, just a
even
few.
For 2018.
Yes, because because it's going to go away in 2019.
Right,
so for this year, they did add a little bit, not a lot, but there is some recourse.
Yes. Another big item I would say is that the child tax credit changed.
Yes.
What happened with the child tax credit that families usually claim?
Okay, it went from $1,000 up to $2,000.
Okay.
But this is non-refundable. Part of it is non-refundable. What non-refundable means is if you don't owe, then it's not used.
Yeah. Okay. So the child tax credit increased from $1,000 per child under the age, I believe, of 17
right.
to $2,000.
Right.
But I think we have about we only have 30 seconds. Let's just wait for the second segment to explain the refundable credit versus the non-refundable. I did a little bit of research and thought it was important to explain that difference.
Yes.
Stay with us. You are listening to or joining AARP Arizona Hispanic Connection. The topic today, taxes, reporting to Uncle Sam. We'll be right back.
Welcome to AARP, Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Thank you. Thank you for being with us today. Thank you for joining the show today. It's very, very important. The topic that we are addressing, taxes, reporting to Uncle Sam. And as we talk about some of the new things that the reform brought for 2018, let me go back to Ismael. Ismael, what sort of things should filers, people who file taxes, be aware when they choose a preparer?
That's a great question. And as you were mentioning earlier, my 20-plus year career, we've investigated a number of individuals who dedicate themselves to preparing fraudulent tax returns and defrauding their clients. And most of the time, without their clients being aware of the fact that they're being defrauded, they were just happy that they found the preparer that got them, quote unquote, a big refund. What we often tell individuals when they go looking for a preparer, it's no different than going to find, a dentist or a doctor or any other professional, someone even a auto repairman. Ask a friend, a loved one, or a coworker for a referral. And when you find one of these return preparers, there's no harm at all in asking that preparer to tell you, what sort of training they've completed.
Mm-hmm.
You can also ask them how many years they've been preparing tax returns. 3, if you can ask, other people that you see there in the waiting area if they've been satisfied with that return preparer's service. There's a number of different things that you can do, again, to make sure you're, happy and with the person you've selected to prepare your return. But it's as simple as simply ask somebody, hey, are you satisfied with the service that's rendered to you?
Right. Now, let us kind of continue just for a couple more minutes on this area. Is it factual that sometimes some tax preparers ask the persons, they almost like they give them a loan for the amount of the refund, and they have the refund go to them as opposed to the person filing? Is that something that you hear, or not so much?
Well, I think it's important to make sure we inform the audience that most tax return preparers are professional.
Okay.
They're honest and they provide excellent service.
Good.
We're talking about the very, very small single-digit percentage of return preparers that offer a type of service or product that may seem a little, let's say, suspicious. There are, products out there that offer a quick, loan to the taxpayer, where they loan you, your anticipated refund. And you do work out the details of that loan with your return preparer. And that is completely legitimate. But if your return preparer offers you something like that, like a quick loan, just basically gather all the facts, ask as many questions as you like to make sure you're comfortable with the product that you're about to accept. The one thing to be very careful about, and it's a red flag, is if the return preparer says, I will personally loan you the money. That's a red flag. Or if they say, don't worry, with my service, the refund comes to me. And then I issue my clients a check from my business as your refund. That is something that I would say you should be very weary about.
Now, I have, based on just my knowledge of taxes, it doesn't matter where you go. If he's a legitimate preparer, you should be able to get the same refund, right? Because there's some people that tend to, promise, more refunds than others. If somebody is a legitimate preparer, you go to 2 different ones. There's only one form. There's only one system. The refund should be the same, or the liability if there is one.
That's absolutely correct. If you have your tax return prepared accurately, and whether you owe taxes after your return has been prepared or whether you're entitled to a refund, that return should be prepared the exact same way by every single preparer that you give permission to prepare your return. What you should be worried about is an individual who tells you, I get you the biggest refund of anyone else. There's no one else in this city that can get you a bigger refund than I do.
It's already a red flag if you hear those kinds of things.
It's something that should make
a professional should not be saying those things, correct?
And more importantly, you should be very careful with a return preparer who says, my fee that I charge you is because I got you a bigger refund. Or if they say to you, my fee is a percentage of the refund I got.
Let me stop you there.
Yeah.
So let us leave the charge of the amount of that this preparer is charged for the next segment. How about that? Because that deserves a little bit more time, and I really want us to talk about the prices that the preparers charge people.
Sure.
Let me come back to Frank.
Sure.
So let's continue just to elaborate a little bit more, Frank, on some of the items that the new law brought.
Okay.
And let's explain the refundable versus non-refundable credit.
Okay, so the refundable credit is one that it doesn't matter if you have a liability or not. That credit will be given.
That's
to
a
you.
refundable.
A refundable,
right. So it doesn't matter. It doesn't matter whether you owe money or you're going to get a refund. You will get that credit.
You will get the money. That's like the earned income credit or some of the other ones that are refundable.
How about the non-refundable?
The non-refundable are the ones if you don't owe money, then it's not refundable. Say, for example, you have a refundable credit, a non-refundable credit of $2,000, but you only owe $1,000. only 1,000 of it will be actually so it'll wipe out.
So a non-refundable will be applied as long up to the liability.
Up to the liability, exactly.
Once it covers the liability, then the rest of the non-refundable credit literally dies.
Does, right. Now, the only exception is like the child tax credit. There is I think it's $1,400 that's refundable, okay, and then or non-refundable. I'm sorry. So if you have enough there, but then once you get the other part up to the 2,000, that's another part, the additional child tax credit that will be refundable. Okay, but again, it depends on the circumstance.
Perfect. Now, this point it should be just a comment. I mean, doesn't require much explanation. But in this tax law of 2017 by President Trump, the corporate tax breaks are permanent for the most part.
Right.
And then the ones that belong to families and individuals, they are not permanent. They are temporary.
Right.
And mainly they die in 2025, most of them from what I read.
Right, just like a 5-year.
Yeah, so let's keep that in mind where that some families may get a little bit more money, may get to keep maybe a little bit more money. But that is temporary. In 2025, for the most part, most of those are going to literally expire.
What changed was the tax rates. We had different schedules from 2017 to 2018. And the tax rates are a little bit lower, but the people have less deductions for the most part.
Right.
Okay? And that means even though you have a lower tax rate, you have more taxable income.
Right.
So it kind of wipes it out. So it's very confusing. A lot of people say, okay, it's going to be great. So the IRS had a good tax calculator because they realized this, and they were asking people to do that, go into the tax calculator before the end of the year because you want to make sure that you're giving enough money out of each paycheck so you don't have to owe at the end.
Okay. Perfect.
So the tax rates are lower, but overall the deductions are not.
The same amount of in the table, the same brackets, but the amounts were modified. So some people may be paying 1% less, 2%, depending on where they fall on that table.
Exactly.
Okay.
And it is good, like I said, they are lower in most cases, but again, the taxable income, in my opinion, is going to be higher for a lot of people.
Right. Now, we do have at least 4 minutes, and I would like us to explain the connection between exemptions and the standard deduction, because these things kind of go together.
Oh, yeah, they're very
so
well
first,
together.
help us understand very briefly what exemptions are and were before 2018.
Okay, and, exemptions in 2017, before 2018, were $4,050 per person in the dependents. So if you had a family of, for example, a couple with 3 kids, their exemption was $20,250.
A couple with 3 kids, the exemption would have been
$20,250. That goes away.
So now, since the standard deduction, which is the first amount that we do not pay taxes on, when we talk about a deduction, is that amount for which you are not liable for taxes.
Exactly. And in 2017, it was $12,000 for, again, it's different for the different how you're filing.
Right.
For married filing jointly, it was $12,700. Now for 2018, it's $24,000. But you don't have the $20,250 that you had of
exemptions. Those are gone.
So if you look at it in 2018, you get $24,000. In 2017, you would have had $32,950.
So in my case, I'm married, filing jointly. I have a kid. That would have been roughly $12,000 on allowances, on exemptions.
Exactly.
But now, since my standard deduction was double, so those $12,000 that I'm going to get by increasing the standard deduction are going to be gone because of the elimination of the exemption.
Right, but you'll still have $24,000 because you're married finally.
Right. So in my case, the $12,000 are even, they cancel out.
It all
pretty
depends
much.
on the different cases.
So it depends on each case, the family. Some will benefit. Some will lose money, like in the case of a couple with how many kids? With 3 kids.
Actually,
they will lose.
Even with 1 kid, they'll lose.
Right. Yeah. So that was how many? 20,000?
20,250. Okay. The other example would be if you had a couple with just 1 child. So that's $8,100. Okay. So that would be $20,800. And the 1 child would be another $4,000. So that'd be $24,850. Whereas this year is $24,000. So they really are $850 ahead.
Right.
But just barely. I mean, they're going to lose $850.
Envision, again, a married couple with, more than 2 children.
Yeah.
It's something that they're going to want to have their return preparer explain to them in detail what the impact was to them.
Exactly.
Right. Now, let me come back to you, Ismael, and now the charge. Give us some concepts and principles that do's and don'ts that preparers should do and or not do, and then how the person has to be alert in that the cost of filing.
We'll go back a moment, and one of the things I should always be very weary of is if you hear the return preparer tell you or in the office that they get all of their clients a refund. That should just be a red alert. But with respect to how much a tax return preparer charges, that's a great question to ask the return preparer when you first sit down with that preparer and ask him or her, what do you charge?
Okay.
Do you charge per form? Do you charge a flat fee? Because it's up to the return preparer how they wish to charge their client.
So they basically, the government trusts in competition.
Correct.
Okay.
And again, there's some return preparers that say, hey, if you have a simple form, this is what I charge.
Okay.
If you're a married couple and it's a simple return, this is the flat rate that I charge. But there's some return preparers and CPAs, enrolled agents, that again, the more complicated your return gets, the more forms that they have to prepare, then they're charging by the form. Or there's some that charge by the hour. So the key is just to make sure that you ask your return preparer, how much do you charge up front? And if the return preparer responds with something like, well, I charge you based on how much of a refund I get you, that's something to be suspicious about.
Right. Or a percentage.
Or a percentage of your refund is what I get to charge you.
So I would say that even if a person is used to going to this place for years and years and years, they should really think about it and see what they're being charged, correct?
There's no harm in asking your return preparer for the first time ever, even if he's been your preparer for a number of years, these questions that we've just mentioned. And what do you charge?
Right.
You know what? I'm curious to know. I've been coming to you for 10 years. Have you continued to, educate yourself? Have you educated yourself on the new tax changes? There's no harm in asking these questions.
Right. Thank you so much. We have to go on our short break, our second one. Stay with us. This is AARP, Arizona Hispanic Connection. We'll be right back.
Welcome to AARP, Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Thank you for staying with us. This is AARP, Arizona Hispanic Connection. The topic today, taxes, reporting to Uncle Sam. So let me come back to Frank. Frank, so by increasing, literally doubling the standard deduction, which again is the amount for which we do, the first amount that we are not liable for taxes.
Right.
That's the deduction. They call it standard. It was double. So so that means that many, I even ventured to say millions might not need to itemize anymore because the items or the amounts that the itemizing computed or it will be lower than the standard deduction.
Yes, that's true.
And that's going to be probably a surprise. Do you agree with that to many people?
Yeah, for most of the people, they're not going to have to itemize because they won't have enough to itemize. Okay?
Right.
The only problem with that is that a lot of people are not going to have the incentive to give donations that they can deduct to do other.
Okay, so let's talk about that. So many people, when they itemize, they know they're going to get some of that money back. So they are encouraged to kill two birds with one stone, meaning to give to charity and then get some credit back from that.
Exactly.
So you're saying that once people know that the itemizing is not going to be there, is not going to help them, that they might turn them off in being charitable and giving money.
I have heard from charitable organizations that nonprofit organizations that is already the case.
Because some people are they have a good heart, they want to
Sure.
help, and then
Sure.
on the other,
Sure.
they prefer to give the money to charity than to give it to the government. So they are
Exactly.
encouraged to give to charity.
Exactly.
So we are saying that now in the cases, and I would say millions of cases
Yes.
where itemizing is not going to be better for the person, but taking the standard deduction,
Right,
in those cases, those folks might not be encouraged to give.
Exactly, but I
Wow.
guess it does make it simpler to do your return. You don't have to worry about itemizing. You don't have to keep track of your medications and so forth. Like I said before, the standard deduction before was $12,700, and then so a lot of people would have enough to actually get up to about 18 or 19 or 20,000 of itemized deductions, which they could use last year along with the exemptions. So that would give them. And now it's 24,000, so that part's gone.
Yeah,
Go ahead.
Just envision that, for most of the general public, especially for homeowners, in years past, the primary deductions that they would take advantage of in what we call itemized deductions were their mortgage interest,
Right.
to their property taxes.
Right.
3 was their charity, whatever they donated to their church, whatever they donated to charitable organizations. Those were some of the fundamental things, and people often also associate it with, well, how much did I pay to renew my annual car registration?
Exactly,
right?
exactly,
Those were the 4 principal ones.
Can you mention them again?
Again,
So property taxes,
your mortgage interest,
mortgage
your
interest,
charity, and generally speaking, what you paid to renew your car
Okay.
tax.
Right. And other sales taxes.
And- right.
Other sales tax as well. For
sales taxes.
Yeah.
Those are included.
Okay.
So you realize that people who maybe own a home and have a first mortgage, and and their interest rate is low, they're not likely to have
Right.
enough deductions.
Right.
So they're going to end up taking the standard deduction,
Right.
definitely.
And then, so one of two things, again, it could spawn the opposite too. It could spawn people saying, well, I want to be more charitable than I've been in years past because I just want to itemize.
Yeah.
So I'm going to increase my, charity contributions this year. Or it might say, hey, there's an incentive there to go get a second mortgage.
Right.
Or go get a home equity line of credit because maybe the interest rate with that, and then maybe I might have enough deductions to get myself, the ability to itemize. But if they do that, I recommend, again, they make sure that they estimate correctly.
Exactly.
Right. Let me address one last item, and there are more, but I just selected a few of the key ones for the general public. With the provisions in the Tax Cuts and Jobs Act of 2017 signed by President Trump, and that is the medical expenses.
Right.
In the cases of people who, for whom itemizing will be the best option, what are those percentages, that the threshold percentage of medical expenses that they can claim?
Okay. For this 2018, it'll still be 7.5% of the gross that is not claimable in the itemized, and then the rest next year is going to go to 10%. So the first 10% of your adjusted gross income you cannot claim as medical expenses.
Okay, so you are saying that only this year they'll keep it at 7.5,
Right.
and starting in next year it'll
Right.
go back to it'll go to 10.
It used to be in the past few years that if you were over 65, it was only
Right.
7.5%. Over it was 10%, but then this last year they changed it to 7, or for 2018, 7.5% for everybody.
Okay, so before it was 10% for everyone except the 65 plus.
Exactly.
The 65 plus was 7.5.
Right.
Now, during this 2018 only, it'll
Right.
be 7.5 for
everybody.
all.
And then next year-
come 2019, it'll go back to 10%.
For everybody.
Yeah.
Unless AARP manages to fight for
Exactly.
that and,
Exactly.
and they do an exemption
Now, the
for the
good thing
65
about that
plus.
is, and what we do at AARP, because we do have a lot of elders, okay, what we do is go ahead and we itemize, even if there won't be enough, because all that medical expense carries down to the Arizona state tax, and that is deductible.
Right.
Okay. The full 100% of medical expenses are deductible.
Perfect.
That's important to know. Keep
Yes.
your receipts with respect to your medical expenses.
Exactly.
Because here in the state of Arizona, those deductions are still dollar for dollar.
Exactly.
Good.
On your state
Exactly.
return.
On your state return. Exactly.
All right, let us move on, and let's talk about the form. President Trump did say that he wanted the new form to be like the size of a postcard, and it does look like a postcard, but It comes in 2 pages, and each of those 2 pages is pretty much the size of a postcard.
Right.
It went from 79 lines to 22. It's going to look apparently simpler. However, what else is linked, Frank, to this? And by the way, the 1040 is the unique and only form that we will be using, no longer others. What was the other ones?
1040
like
EZ,
and
1040A.
and 1048. Now it's just the 1040. But please explain to us what are the attachments that come with this simple quote-unquote form?
Simple quote-unquote. There's 6 schedules, that come in. So, for example, Schedule 1 has 36 more items that you might be able to put in there. Okay, and then
on Schedule 1,
Schedule 1,
wow, 36?
36 more.
So there's 6 new schedules.
6 new schedules. I'm sorry. 6 new schedules. Right, right. Schedule 1, just to show an example, and then all the other schedules have, again, now not everybody is going to have to use those schedules because
it doesn't apply to all cases.
Right. The simplest case, a person that doesn't have any self-employment or doesn't have any capital gains or any other stuff like that, other credits, then they won't be using that. It'll just be, if they just have strictly wages and that's it. Then they probably will not be the other schedules. But it, it depends. It depends on the person.
Right.
But so, it's not one thing that we sort of find funny is that line 21 has always been other income for years and years and years. In the new form, line 21 is still other income. Right. Okay, and that includes miscellaneous income, but it has not changed that number. So when you talk about line 21 income, it's still line 21 income. And I guess it was said that it's only for 5 years, maybe, and that they might go back to the original forms. It depends. Okay.
Could we say then that a particular line in the general form, the 1040, may trigger the need of calculating a specific amount for which you will have to go to one of those schedules?
Exactly. That's kind
exactly
of like that's perfect. Yeah, perfect explanation.
So whereas in the past, all those calculations potentially were included in the one form, making those 79 lines, now they made it to 22 lines, but one line in that of those 22 may trigger you going to that schedule to do the math, so to speak, and then bring that amount back to the form.
Exactly. If you remember the 2017, you had a whole section of adjustments. Okay. It was income, and then adjustments you could come down to the adjustable gross income. And now that's gone out to another schedule.
And sorry to put you on the spot, Frank, but how do you feel as a preparer? And you do this voluntarily. You do not get paid. VITA is one. We'll get to in the last segment. We'll tell folks where they can file for free. How do you feel as a preparer? I'm sure you went for some training.
Yes, definitely.
And how was that training like? And what kind of a taste did it leave you?
It was hard. It was different. Okay, and like I said, we're all volunteers in our section, but we always have training, at least 10 days of training before every season. And this year, there was a lot of problems with the forms. I mean, not a problem, but we were like, before you could see things, now you can't really see them as much as you want to. And we use TaxSlayer as our software. Okay, so it's.
I think, David, a good analogy is that in previous years, all the work by tax preparers and our volunteer preparers was done on page 1.
Yes.
In the front.
Right.
Now the new tax forms, if additional work is required, the work is now done on separate pages.
Exactly. Almost like out of sight, out of mind. In other words, you don't see those lines that you used to see before, but you have to kind of go.
Envision before your return preparers, sit across from you, did all the work right there in front of you. Now you can kind of have this analogy, like your return preparer says, "Hey, I'll be right back." And you see your return preparer step away from their desk, go into a back room, and I'm trying to say this in a nice way. I don't mean anything, negative about this. And they go and do all that work, and then they bring that with them, and they come back and say, "Okay, here it is."
There it is.
Now, I understand that if it's done electronically, everything kind of populates. Am I correct on that, Frank? And
for the most part, yes.
So if you go to a Schedule 1, for instance, you do your math there.
Right.
It'll automatically. You don't have to grab the number and plug it back in. It'll populate it automatically.
Populate, yes.
So electronically, it should flow smoothly.
Yes, and it's great. I don't know how they used to do it when they didn't have computers, because to do it by hand would take 5 days, I think.
Pretty crazy.
But now the software really helps a lot.
Yeah, and this is another thing that, and I know most tax preparers file electronically, but I would strongly recommend that if you go to a person who doesn't do electronically, I would not go to that person. I am sorry, but please have your select one that does electronically. It's more secure and it's faster.
Absolutely, David. I would tell you that for the past few years, IRS has been, making an effort to get taxpayers to file electronically. The goal this year is that 90% of tax returns are received and processed by the IRS electronically. That's the goal, 90%.
That's great.
Excellent. Let's do it. Stay with us. We're going to take our last break. You are listening to AARP, Arizona Hispanic Connection. We'll be right back.
Welcome to AARP, Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Thank you. Thank you for staying with us. This is AARP, Arizona Hispanic Connection. I would like to make the request again. If you are listening out there and you do Facebook, I'm asking you to join our page, AARP, Arizona Hispanic Connection. We just exceeded 1,600 followers. It's not too bad, but our goal is to get 3,000 to 5,000. We would like to do more information, Facebook Lives outside of the studio. In other words, more on a daily basis, shorter ones. But for that, we really need folks to support our effort and connect with us. Again, it's AARP, Arizona Hispanic Connection. That's on Facebook. If you don't do Facebook and would like to watch these videos, all our videos, this is program 91. I've done 91 shows in English, and I'm on program number 5 in Spanish, and everything lives on YouTube and Facebook at the same name, AARP, Arizona Hispanic Connection. I'm very, very happy of how we have carried the conversation. I mean, we're not here to answer every single question, but we are here to basically provide an overview of what people should and can expect this year. It's going to be different. Some people may get less money than other years, Some others may get a little bit more. It depends, it depends on many factors. Ismael, help us understand a little bit more about what folks need to pay attention to when filing their taxes in regards to the preparers.
Sure, David. Again, I think a good segue from the topic we just discussed about the appearance and the look of the new form, right?
Right.
So one of the things that hasn't changed on the form is that if you go to a professional return preparer or a volunteer preparer, the preparer must sign the tax return. So there's still a signature line there.
Are you saying that sometimes they return them without the signature?
I would say that's a red flag. If you go to a professional preparer and again you paid, or again you went to a volunteer who did it for free, you should see two things on that return. You should see that individual's signature, and you should also, number 2, see that person's preparer ID number.
Okay.
So if you see a tax preparer who finishes a return, gives you a copy, the first thing you should check for is make sure your name and information is correct, your social, your address.
Right.
Your bank account information if you're going to be asking for a direct deposit. But the most important thing is make sure the return preparer signed that tax return.
I have this form electronically on my computer. There it is.
There it is. That hasn't changed.
And then the preparer's name, preparer's signature, and then the PTIN. Is that a number that they get?
That's a assigned number from IRS that identifies them as a professional return preparer. And here's one important thing, again, a red flag. Never, ever sign a blank tax return.
Do you mean that sometimes preparers ask them, just sign it and then I'll work on it?
That's a red flag. Someone tells you, look, I'm super busy. You know what? I'll get to your return later. In fact, you don't need to come back. I'll file it for you. And they say, just sign it, real fast. And I'll call you and let you know when, everything is done. a red flag if the return preparer does not give you the opportunity to review your tax return with you before you sign it and say, yes, I give you permission to transmit it for me. So again, make sure you review it, make sure signatures are there, because the person responsible for the information that's on the return is not the return preparer, but the taxpayer.
Okay.
Despite the fact that you went to a professional.
And even if they sign it,
Even
and
if they
everything,
sign
you
it-
as a taxpayer are the responsible one.
party.
Oh,
correct.
That's very, very important. Let's move now into the sphere of providing information as to where folks can apply or file for free. Okay. My tax situation changed last year. Before then, I never went. I misspoke. For the past several years, I did not go to a tax preparer. I did it myself. I went to irs.gov, e-file for free. It'll take you to a third party, actually. It'll actually get you out of the IRS page, but you have to go first to the IRS. And then if you make a certain amount of money threshold, then you can file for free. So we really encourage people to learn to do that if they want to save some money. I don't know how much people pay these days. I'm afraid it's $300, $400, $500. That's a lot of money. You can save that. But in addition to filing for free, there are other services that actually are registered with the IRS. I was checking. Frank, you basically represent at least 3 programs that file for free. Can you share information with the public about what those programs are and how they can tap into them to get a free service?
Okay, the free service, probably if you go to aztaxaid.org.
Repeat that.
aztaxaid, taxaide.org.
That's an Arizona
In
page.
Arizona. And that there you can look at, we got like 14 districts in the state that you can go and get. Now, the only... not the bad thing, but we don't have enough volunteers, so it does take some time. So you do have to wait in line and go forth. And what we do with VITA is we have 3 steps. We have a facilitator, which goes over all the paperwork. Then we have a counselor that actually prepares the tax return. And then we have a quality reviewer that goes over it again to make sure no mistakes were done. He's the one that prints them. He's the one that says, okay, now we can electronically transmit them. So I like that because when you, as a tax return, as a preparer, you don't want to make any mistakes.
Right.
So it's good that you get 3 sets of eyes that look at it, and it's perfect.
Wow, that gives it the best opportunity for literally eliminate any errors.
Yes.
That is,
and we still get just a few, not that many.
Right.
And we do electronically, like I said, I electronically return everything at night. And then I come back and get an acknowledgement or get a rejection. It's okay. Somebody's already used it, so there's identity theft.
Right.
Okay, so it's a good thing to file electronically just for the fact to make sure there's no identity theft.
Right. And we'll talk about identity theft just a bit. Let me also say I work obviously for AARP, and AARP has a great, amazing program.
Yes.
It's called the Tax Aid Program.
Right.
If you go to aarp.org.
Right. Oh, okay.
aarp.org and do a lookup and just look for Tax Aid Locator, Tax Aid Site Locator. It'll literally take you to a page. Within the page, it'll take you to another page. You will enter your zip code, and it'll tell you where AARP offers the free filing services. VITA, VITA is another excellent service. Register with the IRS.
Exactly.
I saw it before coming here.
Yeah. And one thing we mentioned, there's never enough volunteers, right? For any charitable organization. It's a great opportunity for some college students out there who are majoring in accounting or majoring, like let's say to be a tax attorney.
Exactly.
It's a great way for them to do volunteer work in the community while they're completing their college degree.
Exactly. It's perfect.
And they can go to those websites and find, how to become a volunteer.
Exactly. Right. And we actually they started opening some diversity sites, and we had one last year, and unfortunately this year didn't get funded, so it was down in Glendale on the west side. But it was great.
Go ahead.
Go ahead.
Let's also say that Latinos typically, because this requires, I would call it a specialized function. This is not an easy one. Right. It requires a specialized task. For some reason, we don't have many Latinos who volunteer with this program. Frank Varela is one of the very few that I know, and Consuelo joined us
Yes,
the one last
Consuelo,
time.
yes,
If she's listening,
we
agreed to Consuelo. She couldn't make it. Actually, she had said she was going to keep come, but she had the flu and couldn't make it. But again, like Ismael says, if there are Latinos out there who perhaps have some inclinations towards math,
if they're a retired
taxes,
accountant, if they're a retired CPA, retired enrolled agent, if they worked as an accountant for a company and they're retired, it's a great way to do some volunteer work during the tax filing season. Yours truly did it 25 years ago when I was in college, and back when we used to prepare paper returns.
Yes.
Now, Ismael, please help us in the last couple of minutes that we have left. Fraud and this is a perfect time for crooks or the con artists to call people and bug them and deceive them. What sort of things can filers or taxpayers need to be aware of?
Look, in recent years, there's been a big epidemic where people are been getting phone calls from individuals and recordings and again, spontaneous, unsolicited phone calls where the person claims to work for IRS. I want to emphasize here to all your listeners, the IRS almost never calls a taxpayer spontaneously to initiate an official action. They're never going to call you to say you're under audit.
They're too busy.
No, they're never going to call you to say, hey, you owe, you haven't paid. They're never going to call you. What they're going to do is they're going to send you a letter. Okay. The first interaction you have with IRS is via a letter, an official letter. So if you receive an email, you receive a text message, you receive a phone call, from somebody that's supposedly from the IRS and you've never met this person and you have never been contacted by IRS, there's a high probability, and I mean very high probability, that's a fraud phone call. That's a fraud text message, a fraud email. Simply delete it, hang up, don't answer the call, don't respond to the message. In fact, whatever you do, no matter what you do not give these individuals your name, your social security number, and your date of birth. And even in some of them, they're so aggressive that they already have that information. They already call you and say, hi, Mr. John Davis, Mr. Juan Hernandez. This is supposedly from IRS. And is your date of birth and social this? Don't confirm it. Okay? Again, the IRS is never going to call you over the phone in a spontaneous manner. That's a fraud phone call. Hang up. Don't respond to the text message. Simply don't do nothing. And if you want peace of mind, come into your local IRS office, make an appointment, and come in and confirm it. That the IRS is not looking for you.
Social Security, especially guarded, Don't give it to anybody. I
don't care how many tax reform acts we have. Guard your social security number. Don't carry it with you. Look, one of the things the changes that was recently made was for retaires is that their Medicare card no longer has a social security number printed on it. And that was thanks to legislation, and a big part of it was AARP and other organizations who asked their elected officials, can you please take away the social security number on my Medicare card? That was done, and everybody last year who's under Medicare should have gotten a new card.
I volunteer for Medicare Consulting as well, and they should have got it by now.
And again, guard that information. Don't give out your social. Don't give out your birthday to anybody you don't know, and especially somebody that claims to be from the IRS and you've never met them.
Well, we have come to the end of our show. We really hope that all this, I kind of saw this is a conversation, and I loved it. Honestly, I loved it. I was educated myself. I learned. Go ahead. The deadline.
One of the most important things, for David this year and every year is the filing deadline. Correct.
Of course.
This year, again, for your radio audience, the filing deadline this year is Monday, April 15th, 2019.
April 15th. Thank you so much. Thank you, Ismael. Thank you, Frank.
Thank you.
And thank you for joining us today. This was AARP Arizona Hispanic Connection. See you next time.